Hey guys, my name is Max Bexty. Thanks for being here this morning. I really appreciate it. Let's see what's going on. How the hell do I have two versions of StreamYard open? Gosh darn it. All right. I appreciate you for being here. Let's see what's going on. It looks like the market was selling off. Last time I checked. Working on a new video. All right, we'll start with the heat map. It was green last time I checked, but yeah, now it's red. Look at this. We got tons of red. Red all over the place. Do we have anything that's green other than something that's inverse? It doesn't really look like it. Well, yes, bonds actually. TLT's up. Okay. So let's see how our trades are doing on Defiance. JEPY, these guys sold the 55.20 strike. So right now the market's trading at 54.48. So what is that, like 61 points in the money or something? Let's see what it says. 71. Okay. All right. Well, that's, gosh. Okay, that's right. 71. Okay, so these guys are losing $1.01 a share. The dividend estimates at 267, which comes out to 78%. Triple QI, these guys sold the 19,000 strike option. They received $164. Is the good news. The bad news is the market for NDX, which is NASDAQ 100 options, is trading at 18,556. So what is that? I don't even want to do that in my head. It's a lot. More than I can count to. Jiminy criminy, is it really that much? All right, well, these guys are down $2.10. They're losing $3 million. They're having enough. They're messing up stuff enough on their own. I mean, terrible start to the month. Being 9, 10, 11, 12, but then they made 2. They lost 10 in the first couple of days. I mean, it's not any worse than this start, which is just last month. And then also we had another really bad start to the month back here. This month right here was a really rough start as well. All right, we'll see. It's how you end, not how you start. So now we'll look at USO. Now USO was in a little bit of a problem last time I looked. Remember, we looked yesterday and they needed to rally a little bit. They have the 72 options, strike option sold. And now they're selling off more. Well, looks like it's going to be one of those days. So, yeah, well, they need to turn around and go back to 72, but it looks like they're going to have a trading loss. So they're down 70 cents a share on the month right now. 2 days in. Yields $1.09. I just checked that. I think that number's good. All right, so let's see. What else should we check now? Let's do this. Let's see what else is moving. Let's see what's down the most. Look at this. Coney down 11%. Coinbase is only down 4%. Well, was there a dividend or something? Probably. Yeah, I think there was. Or the data providers are supposed to fix this. It's ridiculous. And they usually do fix it. Now, obviously, it's not down 11%. The part that's the dividend doesn't count against you. It's probably really down around 3 or 4%. But it would be fine with me if the data providers never fixed it or if they always fixed it. But sometimes they fix it and sometimes they don't. So I have to adjust the spreadsheets. Like I say, I hate freaking spreadsheets. I wish I never saw a spreadsheet in my life. I do not like them. All right, well, let's see what else we can look at. And as much as I hate them, I stayed up so late working on this one last night. Stayed up late working on both of these. Now, this isn't a live update. This is as of yesterday. This is as of yesterday's close. Yeah, well, down 3 point. Yeah, there's 4 days. It's as of yesterday's close. By the end of the day, I'm going to probably have an end of day live stream, although I don't know. Yesterday's live stream went terrible. I had to take it down. But I'll probably have an end of day live stream. So if I do, we'll have the end of day chart up there. But as of yesterday, this was the cumulative change for the month on all these different funds. You can see the ones that are like closest to the top are the best performing ones because it was a down market. So we had THTA, JEPI, SPY looks really good. iSpy, JEPI, JEPY looks good as well. Really, ZIVBs is the only one that's outperforming the market on the downside in a serious way. FEPI and WiMAX are both down a little bit more than the SPY, but they're also a little bit more volatile. So that's fine on those. All right, then I worked on this chart also last night. So now that's a terrible looking chart, though. I don't know why I won't do the legend automatically. Sometimes it does do the legend. I think I need to switch to Excel. I think Google just sucks, but all right, I'll probably need to switch to Microsoft. I wouldn't have half these problems, I'm sure. Or maybe I just need to quit doing spreadsheets. Like I say, if it wasn't for all I care about is that dividend calculation. If it wasn't for that, also I made spreadsheets initially to prove to people that to show people how they worked and how much money you make selling options. And but anyway, I hardly get any. I don't get the comment very often that they're Ponzi schemes anymore. It's really selling off. Gosh darn it. We'll put up the volatility report. It's been double bearish since back here. And that was actually when the SPX was actually at a low. It was 55.66 on August 28th. It almost went bullish yesterday. It has 3 indicators and 2 of them have to fire. But anyway, so one bullish indicator fired yesterday, but it was a false alarm. Obviously. So it's still saying that, still saying that professionals are putting hedges on and keeping hedges on and adding hedges, which is what happens when the markets go down. When the market reverses trend and starts going back up, we will see the professionals. All right, back here that we had a bearish signal, but then after that was over, even though it was late, the professionals right around here started taking hedges off, and they kept hedges off. That was May, June, no hedges, no hedges, no hedges, no hedges. Hedges started coming back on July 18th. Well, then look what happened. Sure enough, the market pulls way back. Then even the shorter time frame fired a sell signal. So it was a double sell signal on July 31st, which would have been a great place to sell. But in any event, I really like this. I really like following these signals. They aren't always right. You can see over here, the last buy signal looked really nice, but then went up here and it gave a sell signal. Then it gave another buy signal. The shorter time frame did. Turned out to be a fake signal. The market didn't go anywhere. Then a few days later, it gave a sell signal, which was the right trade all the time along. The system doesn't know that. System can't predict the future. It just shows you whether people are buying volatility or selling volatility. It's a little more sophisticated than that because it compares different areas of volatility, but that's basically all it is. That's all it is. Anyway, I've got some positive comments on it. I hope you guys like that. For right now, it looks like down is kind of the direction of the day or right now. Now that can switch fast. I mean, the Fed could do a surprise rate cut at noon. The market could reverse and go up. This thing is not going to know that. Now it will, though. It will catch. It'll see people taking their hedges off if that happens, but it can't predict it in advance. It's not going to give you a buy signal right now. It's a trend following. So anyway, just you have to, it's like any tool, it has its limitations. So I'm making a video on how I came up with it and how it works, and a more in-depth explanation if anyone's interested. All right, so it looks like the market's selling off right now. Let's see what some of these yield max stocks are doing. It looks like everything's going to be down. Tesla, back down here. I'll take the vol model off. Looks like everything's going to be back down. It's not, we don't even need to look at charts. Let's look at, let's just check out the buffer report. You guys excited about RDTE coming out? I know a lot of people love XDT and QDT, and it's going to be the same exact thing. So if you like those two, you ought to like this one. It's going to be on a different underlying, though. So you also have to be sure you're comfortable with the Russell and owning Russell, having risk in the Russell. Because after all, that's what the risk is in these covered call funds, just whatever the risk is in the underlying. So if you're going to have a Tesla covered call fund, that's great, but you have to be comfortable with Tesla risk. So if you don't like Tesla, stay out of the Tesla covered call fund, because Tesla covered call funds don't do well when the underlying drops. They're bullish. They're bullish bets. All right, so let's see what's doing the best. JEPY. Why doesn't that surprise me? Look at that, killing it. Now, and we know that because I talk about that constantly. It's going to do the best on big down days. That's what it's designed for. And these high-powered funds will do the worst on big down days. They're getting killed today. XDT is not doing that bad. It's down 1.43%. JEPI is down 0.38, so it's a full percent difference. Well, let's look at the SPX. Let's look at the path dependency and see if we can figure out why that happened. All right, so last night's close was here. Last night's close was at 55.02. That is the spot where Defiance wrote options for the next day, and they wrote we're looking at the profit box. They wrote the 55.20 right then. But then the market opened about where it closed. So there was no advantage or disadvantage yesterday to what Round Hill did, other than they brought in less premium. They also brought in less premium because the big announcement happened at 7:30, and the SPX doesn't start trading until 8:30. So I'm saying today Round Hill got the worst of it because they missed out on the premium related to the number. And that's the difference there's a full percentage point difference in the returns today. You can really see it in the cumulative returns too. Look at this. Not that it's not a great fund, but these funds are just tools. You have to know what they do, what they're designed to do. You could see over here, this was last month's cumulative return for some of the funds I like to follow that are based on the SPY or the SPX. Well, this is, and last month it was the leader of the pack. No doubt. Fund of the month, 5%. This month, the market's turned around and pulling back, and this fund is designed the way it's designed. It's going to do worse than the other funds that are on this chart on days when the market's down. So, and sure enough, true to form, it's down about just over 4 days. The cumulative return is down another, JEPY is down 2.25. This one's down 3.4. So that's a pretty big. I mean, that's like a 50% difference. It's a gigantic difference. Anyway, but that's what happens. Just know what you own, and it's great for bull markets. JEPY does a little better in bear markets. I say have some of both, maybe, or whatever. Talk to your own financial planner. Don't listen. I say don't listen to people on the internet. Go talk to your planner. But I could make a case for either one of them if I was your planner. I'm not, but if I was, I could. All right. So that's interesting, I guess. What else can we look at? Maybe the market will catch a bid in here. Maybe we don't go all the way down to this. I said the other day, right here into this rally right here. I had a morning update, and I said it's probably a dead cat bounce. it's probably a good place to sell, and it looks like it was so far. And then I also said if we get under, this is a gap fill right here where the market didn't trade, which is bullish. It's bullish as long as you stay above it. Now that when we're under it, now that can act as resistance on top of us. So the next support or potential gap area that they might be aiming to, they call it repairing a gap, but where they go back down here and revisit would be at 53.73. That's a full 100 SPX points lower than the market is right now. It's a full 10 SPY points lower than the market is now. I'm not saying we'll go there today or we'll go there at all necessarily, but that's the next stop on the map. I mean, as far as I'm concerned, we'll see. 540 looks like it could be minor support, but if it gets under 540, look for 536 to 532. Now, it's not all bad news. Maybe at that point, professionals will start taking hedges off, start taking volatility hedges off, and the market will turn around and go up. And if that happens, we'll know about it because of this, or ideally we will. This will probably tell us a little bit late, but this will help. It helps you confirm. I like stuff that helps me confirm my judgment. I always think human judgment can be flawed, but it's great to have different metrics to confirm your judgment with. All right. Well, hope you guys like this update. I'm trying to think if I covered everything that I wanted to talk about. I did want to say one other thing too. iSpy. It's a daily option fund. The other day I was saying something about it. Well, yeah, iSpy just earns 8% or 12% or something. Well, I was wrong. I mean, it did used to earn that. But the other day I was looking at something and iSpy earns like 20%, but it's because volatility's doubled in the daily time frame in the last couple of months. You know, it's been a couple months since I looked at it and it used to earn 12% or something. So anyway, sorry about that, iSpy. iSpy to me is a great competitor. Let's just pull it up here. Let's pull up iSpy and XDTE. It was already up. Now this is just for this month. I was trying to check my math to make sure I had done that spreadsheet right when I was up late working on it last night. But let's just check it year to date. I don't know if XDT's been here a year, but let's just check it. Boy, look at that. Very similar funds. Very, very similar total return, as you can tell. However, XDTE pays $5.56 or has paid $5.56 on $52. So that's 10%, and that's over half a year. So we'll call that 20, just on average, just doing math in the head real quick. This one paid $2 on 40. We'll call that so it'd be $4 on 40. So it'd be like at the rate it's going, it'd actually be $4.60. At the rate it's going, it's looking like a 10 or 12%er. But the last payment it received was like double that just because of the elevated vol. And I felt bad that I had said it was, I kind of threw shade at iSpy, but let me try to find dividend history. There it is, 17.45%. So yes, based on the latest dividend at 61 cents compared to the other ones that have been 20s, 30s, and 40s, 30, 30s, 40s. I mean, hell yeah. Anyway, it's really great to see that. All right, guys, I appreciate you for being here. I hope you have a good day. I will talk to you later.